joining in today. I have my colleague Claude Golliker with me once again, so he's going to help out, and it won't just.
Everyone.
Sorry, Claude. Thanks for jumping online.
Not a problem.
Do appreciate everyone's time, as I was saying a moment ago, for jumping on. So what we will do is we will try and keep this to an hour again today, as we did last week, although we held over with one or two individuals and answered a few extra questions. But we are very conscious that everyone's busy, everyone's time is precious, and there's also a lot of information to take in. So what I will be doing is running through a PowerPoint presentation with various bits of information in relation predominantly to JobKeeper, which seems to be what everyone is interested in at the moment. So very important to all of us to understand how it works and what we're entitled to. We'll also be looking at a few case studies and real live examples of how it works in operation, and as well as answer a few questions, or a number of questions that people have raised. So what we will do as well is, if you'll bear with us, Claude and I will tag team a little bit. We'll run through various sections of the presentation initially. We'll run through some questions that have been asked of us in the last 48 hours, specifically from participants on today's call. And then we're happy to take any other questions that you may have. So we do have Serena online as well, so she's monitoring the chat session. So if you do have any questions as we go through, we might not be able to answer them during the session, or hopefully we answer them for you in the presentation. But if you still have questions at the end, we're happy to run through them, time permitting. So thank you very much. We're about 4 minutes after 1 o'clock, so I will make a start now. So Claude, you're happy to kick off as well?
Absolutely. Yes.
Okay. Just a little bit of, actually, as I said, Claude's details and mine are on the screen. To let everyone know as well, if you haven't done one of these with us before, we will provide you with a recording and a copy of these PowerPoint slides. So no need to take notes specifically unless it's something that we haven't noted. A little bit of housekeeping. We have got everyone muted apart from Claude and myself. It's just to reduce any background noise that we may have. As I said earlier, we'll run through the presentation, we'll answer a few questions, and then answer any new ones that come up as well. So please ask any questions via the chat box, which hopefully you can all see on your screen. Today's agenda, again, these have changed a lot over the last few weeks from where we began about 4 weeks ago. The predominant area that we're going to be looking at is JobKeeper payments. Who's entitled to it, how you apply for it, how it will actually be working for employees and employees, and employers and employees. So, excuse me, we'll go through all the mechanics of that as far as we know. And this again is like everything, changing by the hour. So we'll explain a few more things shortly. The other section we'll talk about only briefly, but happy to take more questions on it, is about lease negotiations and how to communicate with your landlord. So again, we have a number of people asking us for help on that area of their business. Some frequently asked questions. Again, we do have a continuing number of questions being added via our website, via the registration for this webinar, as well as just emails coming through to us day by day. We'll talk a little bit about tax planning and FBT, as well as year end, and talk about business continuity. So if everyone's happy to do so, and apologies, I'll put my phone on silent. So I meant to do that earlier. Predominantly right up front, the key area that we want to talk about today is the JobKeeper payments, whereby the government came out a couple of weeks ago and announced some significant measures in relation to business. That's the majority of businesses as well, who are potentially eligible for this. And it is a measure that's been put in place to assist businesses to not only maintain their business, but maintain their employees. And on the flip side, for the employees to maintain their job. Okay, so it's pretty simplistic in the intent. It's a little bit more complex as to how it is applied. And then when you get down to some of the nitty-gritty details, it gets much more complex. So we're happy to step through the simple side of it. We'll step through the mechanics of it, and then perhaps we'll deal with some of the individual issues. So I'll press on, and apologies if I do rush through any of this. I'm happy to come back to any slides that people want to cover again, or Claude, you may need to pull me up also, but we do have a lot of material to cover today, so I wanted to make sure we run through it. But predominantly, the JobKeeper payments basically enable eligible employers to pay their eligible employees a salary of at least $1,500 a fortnight. Okay, that's $1,500 before tax a fortnight. Again, I'm going to go over the headline details, and then we'll come back and explain what some of this means. But you'll also notice I'm being very specific when I refer to eligible employers and eligible employees. So that will become clearer shortly. Eligible employers will be reimbursed a fixed amount of $1,500 per fortnight. Employers will need to pay eligible employees a minimum of $1,500 per fortnight as well. Okay, so we'll come back to this as well, but just so that it is very clear, because we got some additional detail a couple of days ago that clarified a lot of how this would work. And payments will commence to be made to employers in the first week of May. So we're told from the 1st of May. However, the way the ATO are talking now, it's potentially the first or second week of May. Okay, so we will see how that plays out in due course. If employers do not continue to pay their employees for each pay period, they will cease to qualify. So again, if this only applies if you have employees who are eligible and you pay them. Okay. Your entity is eligible, and this is where there's been a little bit of confusion. However, again, the basics of it are that if you are eligible, if on the 1st of March 2020, your business or you did carry on a business in Australia, and the important part is you satisfy the fall in turnover test for the relevant period. Now, that fall in turnover test for the majority of businesses that this will relate to is 30%. And again, we'll come back to this turnover test shortly, but that's a key factor in determining whether you are eligible. You're also eligible if you satisfied certain conditions as at the 12th of March. And the 12th of March is when they announced these provisions. So you had to have had an ABN and you had to have lodged before the 12th of March at least one of your 18-19 income tax return or an activity statement or GST return, your BAS basically, for a period leading up to that. Okay. The ATO has certain discretions, but I don't think we need to cover that just now. Employers will be eligible for JobKeeper payment if all of the following apply. 1st of March 2020, you carried on a business. You employed at least one eligible employee on the 1st of March 2020. There's a bit of a rider on that. We'll come back to that shortly. Your eligible employees are currently employed by your business for the fortnight you claim for, including those who are stood down or rehired. And again, as we all know, a lot of employees were stood down over the last month. So it's important that this does still apply to those employees as long as they have been paid. This is a critical one. Your business has faced a 30% fall in turnover for an aggregated turnover of $1 billion or less. I'm going to ignore that threshold of $1 billion because I know everyone on this call is well under that. So, but the key here is that you have to justify a 30% fall in turnover. The turnover calculation is based on what the ATO are calling GST turnover, but there are certain modifications to that. And even we have not got the detail on how this will be applied just yet. As of this morning, we didn't have that information. The ATO is still saying we refer to GST turnover. However, we can't tell you what that means just yet. Okay, so we surmise what we think it is. However, we're waiting on a bit more information. So, and Claude, you haven't seen anything further on that, have you?
No, Calvin, not as of today, nothing has been clarified, but I'm guessing that there will be a lot of information coming through on next Monday.
Okay, all right. And we'll explain why next Monday is a critical date shortly as well. Employers, self-employed and sole traders. Okay, so this is an area that again is critical to certain people on this call today, as well as a lot of people in the business community. The JobKeeper payment, you are also eligible to that if you are a self-employed person. For example, you are a sole trader. Okay, so there's some important critical roles that you can play within your business that you may not be an employee, but you are entitled to these sorts of payments for yourself. So as it says there, if you are self-employed, you will be eligible for the payment provided you meet eligibility criteria. But an individual can only receive JobKeeper payments from one source. Okay, so if you're receiving JobKeeper from another source and you run your own business, you can't double dip, you can't get it twice. So it is important to make sure that you don't try and chase this to the nth degree. You can only be eligible once. Sole traders can be eligible for JobKeeper payment if your business, similar to the other test, has experienced a downturn, and that is 30%. Business owners actively engaged in their business. This covers other structures. So we talked about sole traders, but if you operate through a company, a trust, or a partnership, you can also be eligible for this. So it is critical that you start assessing now whether you will be eligible and considering whether you are an employee. And if you're not, don't disregard these provisions. You can still be entitled to this, but again, you can only be entitled to it once. We have pulled together a number of case studies. Okay, so I'm not going to go into detail on these because they are quite lengthy, but what they do is they cover off on where people do qualify, where they are eligible, and also where they're ineligible. So what we will do, we'll provide these to everyone after the session. If we get time, I'll come back to these, but for the moment, I'm not going to dwell on them because in a moment, Claude's going to talk a bit about employees as well. So, but for the moment, just be aware there are a number of case studies that I believe would cover 99% of cases, but happy to consider your 1% if you think you live outside that those case studies. Aggregated turnover, again, not highly relevant for us here, so I'll skip over that. How do you determine a fall in turnover? Okay, and there's some critical parts to this. One is you only need to satisfy this requirement once. Okay, so if you can justify you've had a drop in turnover by 30% now, you don't have to keep retesting each month. If you qualify now, that covers you for the next 6 months. So that's really, really important because that could mean you had a really awful March or April or even May, and therefore you will qualify. Even if everything picks up over the next 6 months, you will continue to get these payments as long as your employees are eligible, okay? So at the time you enroll in the JobKeeper payment scheme, you need to confirm your business in a relevant period has had or is likely to have a 30% fall in turnover. Okay, so really important here, guys. You only have to pass this test once. So it becomes critically important that we use the right period to determine that you've had a decline and tick that box so that you can move forward. So talk to us after the session if you like, email Claude or I or the rest of our team, but just I want to stress this point. You only need to satisfy it once. So look at which period we're going to be assessing you on or the ATO will assess you on. Okay. Now, to work out your fall in turnover, and again, we're getting certain information from the tax office on this, but we're not getting a full picture just yet. So we're gleaning what we can and working with what they've told us, in black and white, what they've said. However, we are thinking that certain other aspects or other factors will come into play. So to work out your fall in turnover, you can compare, for example, GST turnover for March 2020 versus GST turnover for March 2019. Now that's simple. That basically says, has March this year declined 30% or more compared to the same month last year? Okay. And that should be pretty straightforward. If you had a GST turnover of $100,000 in March 2019, have you done 70,000 or less in March 2020? So again, very important you look at these numbers, very important you consider, how your business is performing month to month, quarter to quarter as well. Because the next point says, what do you project your GST turnover for April will be? And how will it compare to April 2019? So again, you can qualify based on what the current month looks like for your business. So again, March could have been great. We know a lot of businesses that were still going gangbusters in March, even into April, but they fell off a cliff in 2 or 3 weeks ago. So just keep that in mind, that it's not just a line in the sand at the end of March or even at the end of April or May. You can qualify for this over the next 6 months. You also need to consider projected GST turnover for the quarter starting April 2020. So again, if you think that March was okay, the wheels didn't fall off the business until the middle or the end of March, and as a result that looks okay, we can project forward and say, well, how does your next quarter look? And how does it compare with last year for the same period? How you choose to project your fall in turnover is not dependent on whether you report a quarterly or a monthly BAS either. So this is important. Even though the ATO are talking about GST turnover, it's our understanding that it's not determined by your BAS period being quarterly or monthly. So keep that in mind. We are waiting on more information. As we say down here, the ATO keep telling us they're going to provide more information soon. As soon as we find out, we will publish that on our website. If we have further chats like this, we'll let you know. But just keep that in mind. It's not a hard and fast rule. It's not black and white. It is not purely determined on 1 month, 1 quarter, 1 year. So please, please, please keep that in mind and talk to us. Okay. How to calculate a fall in turnover for the first fortnight starting 30th of March 2020. If you work out that you qualify for JobKeeper payments for the first fortnight because your turnover has declined, you remain eligible and do not need to keep retesting. So I mentioned that earlier, but we just want to stress that for you. Okay, the important thing as well is, even though you won't be retested, you do need to account to the ATO or the tax office on a monthly basis, confirming your employees, who's employed, those sorts of things. A lot of this now is going to be submitted via STP, or it is for the majority of employers. So the ATO are aware of who you employ, and it becomes critical to maintain that, keep it up to date, and make sure you're processing pay runs regularly. The Commissioner of Tax also has a discretion to set out alternative tests. Again, we don't have information on what these alternative tests are, but we are being told that they will allow certain other factors to be considered in allowing you to be eligible. Okay, so talk to us, keep online with our website, check the ATO. The ATO are given responsibility to administer this, so it is important that everything we do will be done via the tax office going forward. Eligible employees, I'm actually going to hand over to Claude because he's going to have a chat about who is an eligible employee and how they become eligible. So over to you, Claude, for now.
Thanks, Kelvin. So the first criteria, like Kelvin said, was to do with being eligible as an employer, and predominantly if your turnover reduces by 30%. So if you qualify from that perspective, then it's a case of saying, right, which of your employees are eligible for the JobKeeper payments. So it's basically any employee that has been employed by you, even those that you had to stand down and then rehired. So some of those examples would be if you were in a hospitality business and you're basically mandated by the government that cafes, restaurants, hotels, and the like had to close. So you had to stand down your employees. Then they will be eligible under this scheme. It applies to not only full-time but also part-time employees. But the critical date is as of the 1st of March 2020. It also applies to casual employees, but they must have been employed by you for at least 12 months. And again, as at the 1st of March. Also, if you have a casual employee, but they have a permanent position somewhere else, then they need to first go to the permanent employer as a starting point, as far as eligibility goes. And they also have to be at least 16 years of age, again, on the 1st of March. So all these dates, the starting point is 1 March 2020. They have to be an Australian resident under the Social Security Act. And also, if they weren't in receipt of any type of centred benefits, particularly parental leave, dad or partner payments, and they've also are not in receipt of any type of workers' compensation payments at this point. And you also need to agree that you are going to nominate them as an eligible employee, and we'll talk a bit more about that further on. So now we're talking about which employees cannot claim the JobKeeper payments. So again, if you employed people after 1 March, then unfortunately they don't qualify, as well as they left your employment prior to the 1st of March. So let's say that things took a turn for the worse and they decided to leave, or you made them redundant prior to 1 March, then they will not be eligible. And as mentioned before, if you can only claim the JobKeeper payments from one employer. So if you've got multiple jobs, you just need to check with your employer which one of them are claiming it on your behalf, and you can only claim it once. As Calvin mentioned before, there's no double dipping in this scenario.
This is sorry, Claude, but this is not dissimilar with most employee relationships or employer-employee relationships where you can only claim a tax-free threshold with one employer. This is quite similar in the sense that, all right, well, you nominate with one employer that you will be an eligible employee for JobKeeper. You can't then go with another employer and do the same thing. So very straightforward. You can see where the ATO are coming from. They just don't want anyone rotting the system, and they made it very clear in the way they're rolling this out that they won't allow you to do so, because it'll be maintained at the back end by them as to who is eligible. So they will cross-check, you'll disclose tax file numbers, the employer will disclose their ABN, and it'll all be cross-matched within the ATO.
Yeah, absolutely correct, Calvin. And it might not happen in the first month of receiving it, but the ATO will eventually come to the party and find out, and that's where repercussions will happen, not only for the employer, but for the employee as well, I'd imagine. As mentioned before, so if you're a casual employee, you do qualify as long as they've been in your employ for 12 months. If they started, say, 1 January, so they've been for you for, say, 3 or 4 months, then unfortunately they don't qualify. That last paragraph just talks about, as mentioned previously, if you have multiple employees, they can usually choose which employer they want to nominate. However, if your employees are long-term casuals and have other permanent employment, they must choose the permanent employer and cannot nominate you. So what they're basically saying is if you've got 2 jobs, one's a casual and one you're a permanent part-time, then you need to go and seek it through your permanent part-time employer first. Employees who were stood down or on long-term leave. So Those that have been stood down under the Fair Work Act without pay may still be eligible as long as they were in your employment and met the eligibility criteria as of 1 March. So again, that important date. You will need to have, and this is the important part as well, you would need to have paid them at least the minimum amount, which is $1,500 per fortnight for each employee before tax to receive the JobKeeper payment. And we will go into this a bit more later, but it is imperative that any employee that you are paying, and if they are have earned less than $1,500 a fortnight, you must pay them the $1,500 and have that shown in your payroll pay run for that relevant period. If employees have been terminated, you can re-engage them and they will still be eligible as long as you meet the eligibility criteria on the 1st of March. If you want to claim the JobKeeper payment, you have to have them re-engaged, and they also need to confirm that they want to be rehired and participate. This is where certain forms are required to be completed, and we'll discuss that a bit later on as well. You must re-engage them, and there's a link there to a nomination notice, which you need to hand to your employees, basically saying, look, myself as an employer, I'm nominating or I'm applying on your behalf for the JobKeeper payment. Please fill this form, make sure that you meet all the criteria and have it sent back to us, which then means you then forward that onto the ATO for filing. So that's all part of the process of what's involved. Again, we are getting more information every day, but we are led to believe that this coming Monday is the magic day where all this information will be available on ATO websites. And as discussed, they must be paid a minimum of $1,500 before tax for each of the fortnights. And I'm not sure if the slides say it a bit later on, I think they do, but April being the first month that this applies to. So you need to make sure, and I think the ATO has given us discretion for the first month, that if you haven't paid the relevant employee that you want to nominate for JobKeeper, the prescribed $1,500 fortnightly payment, you've got up until the end of April to basically do a catch-up payment and still be entitled to the full $1,500 rebate by the government in the first week of May, because this is all to do with, and I know this was asked as part of a question later on, these subsidy payments are all payments in arrears. So you need to have made the payments in April and show them in your pay runs to then be able to get the subsidy amounts back by the ATO in the first week of May.
Spot on. This became very clear this week that the full amount of at least $1,500 had to be paid to employees to be reimbursed. So as Claude said, the ATO are going to allow a bit of leeway in the month of April because the information is only just coming to hand. However, going forward, unless you pay someone that full $1,500, you will not be able to claim JobKeeper for them. So that's critically important for us. We will deal with a few questions later that cover that as well. So,
spot on, Kelvin, and even to the point where, let's say you've cut their hours, or and let's say they've earned $500 a week, let's say that $1,000 a fortnight, I should say, based on the hours that they've worked. To participate in JobKeeper, you need to actually pay them $1,500 a fortnight. So yes, in those circumstances, the employee will be receiving more than the actual work that they're doing.
Thanks, Claude. This is a very quick example, which I'll let everyone have a read in due course, but it deals with the basics, and it's not as complex as some of the case studies we put up separately, but they do run to a few pages. So we will skip through this. Sorry, thanks, Claude. If you like, I'm happy to take over. What we do need to do is we need to notify each eligible employee that you intend to nominate them. Okay, so as we said earlier, there was a link in the presentation where you can download the form from the tax office. That is the form that you utilise to complete your details, and they're pretty simplistic. Name of the business, ABN, and it's given to each employee to let them know that you intend nominating them as an employee. They then need to accept that and give it back to you. Okay. You must tell those employees that you've nominated them. So that's the reason for this form being completed. And they must return it to you. Otherwise, you can't claim them. The form itself doesn't need to go to the tax office. So again, it's a bit like tax file number declarations. As long as you have that on file, that's the sort of information the tax office will come back and ask you about if there's ever any queries about it. But this is a critical part of the process. There's a couple of critical parts in the actual nomination and registration process that we'll talk about now. But this part of it is get this form, download it. You'll get the link in the presentation when we send it out. Download it complete it for each of your employees. You can complete them electronically and then email them or print them out for them and get them back. After you have worked out you and your employees are eligible, if you meet the eligibility criteria and want to start claiming, you need to start paying them at least $1,500 per fortnight. Okay, and you need to continue paying them if you want to continue to claim. So it's logical the way this works. The ATO have dumbed it down really for most people. The critical part of uncertainty at the moment is the month of April. And that's where there's some concerns for a lot of people. Again, we've given you a link within the presentation, but at the moment, this just registers your interest. All that is going to do is get you on the radar for emails and text messages for updates in relation to JobKeeper. It's not enrolling you for JobKeeper. That is a separate process, which, as Claude said, isn't available until at least Monday. Okay, this is the critical part. You will be able to enrol in JobKeeper from 20th of April, being this Monday, on an online form. Okay, so talk to us. We will be in touch with you probably Monday or Tuesday as well, with all of our clients and anyone else that is on our mailing list to let you know what the process is, let you know what's involved, and potentially, if you need assistance, let you know how we can help you out. So keep an eye out for those sorts of emails. We know we're sending a lot of information at the moment, but there is a lot of information out there that we want to clarify. After you enrol, you will later identify your specific eligible employees and submit that information to us. Your entity needs to enrol by the end of April for payments in either the fortnight starting 30 March 2020 or 13 April. So we have a window, and we're pretty much looking at it as being next week. Okay, the 20th to the 25th, where you need to start getting your ducks in a row and identify A, are you eligible? Do you qualify? And B, do you have eligible employees? So that you can then start to work through the process of getting registered. If you have already registered with the ATO for an update, you should get notification shortly. We're told, ATO are telling us that they're going to let everyone know. I know I'm getting emails. I haven't had a text message for a week or so, but I am getting emails referring me back to the ATO website. Okay, and apologies to everyone as well. We are keeping abreast of this as much as we possibly can, but even the ATO are struggling to get all their systems in place. So we're working as quickly as we can to be able to do all these things. The application documents, you will, we believe, have to be looking at 12-month comparative P&L statements. Okay, so March, as we said earlier, March 2019 versus 2020, the quarter, April, those sorts of things. The ATO is looking at sales revenue, sales/revenue turnover, but if profit is down, you should supply that information as well. This is where the discretion comes in. And again, it's critical to make sure that whatever you submit to the ATO qualifies you. You don't want to put information up there that shows that you don't meet the test, because automatically you won't qualify. And obviously we can help clients to pull that information together. As we said, the Commissioner has discretion to look at other aspects. So that really is everything to do with JobKeeper. It's a lot of the mechanics of who is entitled to it, how you qualify, and then how you enrol and how it will get processed. a couple of the critical things that we need to stress again, one is you need that 30% decline in turnover. So you should be looking at your figures now to see what they look like. If you're unsure, talk to your bookkeeper, talk to your accountant, talk to us, obviously, but just make sure that you do qualify on that basis. If you don't, consider whether you may qualify in a future period, you may qualify for a different period, or whether there's the ability perhaps to seek a discretion from the tax office. So that's a critical part of it. Secondly, eligible employees. Do you have eligible employees? Are they not on, they're not on the wrong type of visa. They were employed at the 1st of March. And importantly, not only are they entitled to $1,500 per fortnight, but they must have been paid $1,500 per fortnight. Again, we can't stress that enough, that a lot of people were thinking that, oh, well, we'll just say that people were getting paid, but we won't actually pay them until we get paid by the ATO. Now, the ATO are not going to allow that to happen. The government have actually foreshadowed this, saying you must have paid these people during the month of April in order to get reimbursed during the month of May. Okay, they will not reimburse you unless you've physically paid them. And we also look at things like single touch payroll that confirms that you've paid these people. We've also seen people say, oh, this is a quirk of the system where you may have had a casual or a part-time employee earning $1,000 a fortnight. Now they're going to automatically get a pay rise to $1,500 per fortnight. So again, a lot of people were thinking, oh, well, I'll just continue to pay them $1,000 a fortnight. Then I'll pocket $1,500 a fortnight and I'll either make up the difference to the employee or I'll pocket the difference. Neither of those will be acceptable under the ATO rules. So you must pay these people $1,500. It seems strange and it's a quirk of the system, but they must be paid. Claude, you agree with that, don't you? There's
Absolutely
no way around it.
No, none at all, Kelv. And it's part of the integrity measures announced by the government.
Yes. So some people get a win out of this. So your part-timers and casuals may get a win because they'll effectively get a pay rise. But that's effectively, it's no skin off your nose as a business owner. As an employee, it's a good position to be in. However, you can only do it once. So as we all know, some casuals and part-timers have two jobs. So they can only do this the once. They won't get paid by the other employer.
Just further to that, Kelv, let's
Sure.
say that you don't have your processes in place for April and you start doing it in May, then you're basically going to have to wait another month before you get reimbursed by the government. Because as I said earlier, it's you will get reimbursed in arrears. So that's why it's critical that you get your pay runs for April corrected and paid by the end of the month to be eligible to receive the amounts back in the first week of March. First week of May. Otherwise, you're going to have to wait another month.
The same applies if in the first fortnight of March, which is well and truly past, if you didn't pay them the full $1,500, the tax office have allowed you to make up for that as long as it's done by the end of April. Okay, so we've got until the end of this month to get things right. But it's critically important that you do get it right by the end of March if you want to get the full $3,000 for the 2 fortnights per employee. But if you've got 10 employees, that's significant dollars to your business to ensure that you continue to employ these people. And as I said, I think last week, all of these measures are put in place which effectively turn a lot of small businesses into private Centrelink offices. So you're effectively going to say to the tax department, I've got these people on my books, potentially unemployed. However, you give me $1,500 a fortnight, I will pay them $1,500 a fortnight. So just keep that in mind. You should not lose anything in this process over and above what you would normally have had to pay someone. Okay, so look, I am going to keep moving because we've got about 20 minutes left. But we will come back to JobKeeper because I know there's going to be a lot of questions on JobKeeper. And we already have a number that we want to answer. So let me just push through for now and move on to the next section we wanted to talk about, but I'm going to be fairly brief on this. This is in relation to commercial tenancies. We have been consulting with a lot of clients who are either tenants, commercial or retail tenants, or commercial or retail landlords. And on both sides of the fence, we can see potential issues. Okay, as has the government. The government came out early and said and made some very bold statements. You know, landlords won't be able to evict people. If you can't pay the rent, you won't be treated as trading whilst insolvent. All of these very grandiose statements, which almost were contrary to, you know, contract law, tenancy acts, all these sorts of things. So since that time, they have come out and they put in place what they're calling a mandatory code for commercial tenancies. Okay. Now they're saying it's mandatory in the sense that the federal government can't mandate on this. However, they have worked with the state governments, and each state government is supposed to be introducing a code of conduct which is covered in their retail or commercial tenancy acts. And it will effectively cover what Scott Morrison's talking about. He basically wants to bring together a set of good faith leasing principles, basically meaning that everyone negotiates in good faith. And if there's a bit of pain, then it gets shared and it allows everyone to move forward without some people. For example, you may have seen in the press, Solomon Lew, who's a major retailer, basically closed all his stores and said, I'm not paying any rent until this is over. So he wanted to stop that from happening. And at the other extreme, he wanted to stop landlords from evicting tenants who didn't pay for 1, 2, 3, 6 months. So he's trying to find a middle ground. Okay. But the basic premise of the code is that initially he's based it on JobKeeper. So we keep referring back to JobKeeper, which is a bit strange, but he's effectively saying if the landlord or the tenant qualifies for JobKeeper, that is, they've had a 30% drop in revenue, then this code will apply. And he's basically saying landlords must not terminate leases, or tenants must likewise honour their agreements. Contractually and legally, they must anyway, irrespective of what gets said. Landlords will be required to reduce rents in proportion to the decline in trading suffered by the tenant through a combination of waivers of rent and deferrals of rent. And again, a lot of this seems reasonable when you break it down into these simple terms, but we're yet to see what the state government comes out, in particular the WA government. He's also said that the waivers, as in the, the off the top reductions in rent, must account for at least 50% of the reduction in the rental provided to the tenant during that period. And the deferral would be the other portion. So, for example, if a business has declined by, if the tenant's business has declined by 40%, then what the government are coming out and saying is, all right, well, you should be entitled to a 20% reduction in rent and a 20% deferral in rent. And so the reduction comes straight off the top. The deferral will just get pushed back and you will repay it over the balance of the lease term of at least 12 months. So again, there's some detail behind this, but they're basically trying to share the pain a little bit. Okay, so again, this summary, and that's why I wanted this on one page so that you can just refer to this to say, well, how is it going to work? But I can just at the moment encourage you to either talk to ourselves, talk to, even leasing agents if you're in a commercial tenancy arrangement, or keep your eye on what does come out from the state government. We are actively working, as I said, for landlords and for tenants to effectively shore up their position. And only 2 hours ago, I was on the phone with a commercial tenant. We've got 2 tenancies, retail tenancies, where we are having to go to them to say, look, we do want to enter into an arrangement because even though we have been operating okay, we can see the wheels falling off. So we need some reductions in the next 6 months. We've advised clients, we've helped to pen letters to clients or to tenants, to landlords, sorry. And we've also worked with the landlords on the other side to say, well, look, this is the arrangements that should be getting put into place. Because again, I think there's a lot of commercial tenants out there that may not necessarily be affected by this. However, they're using it as a justification for seeking a rent reduction. And we have seen some extremes where people have said, I want a rent reduction of 50 to 100%, yet Blind Freddy can see their businesses is still running a million mile an hour. So it is a matter of just making sure that everyone's on the same page. If there's pain being had, then it does get lessened slightly on both parts. There's also a lot of talk that this doesn't necessarily give any protection to the landlords, because the landlords may have commitments in the sense of borrowings in relation to the property. So again, the banks are under pressure to come to the party there, but they're not always doing that either. So we'll have a chat about that shortly. So I won't go into that anymore. What I will do now is I want to run through some of the questions that have been asked. So again, I'll seek some assistance from Claude on this. But hopefully some of these questions have been already answered. As I can see here, can two different businesses claim JobKeeper payments for the same individual? Okay, so we've put the answers up here just so that you've got copies of it. However, the answer to that is no. Only one claim per individual can be made. An entity cannot claim JobKeeper payments for an individual if there's already a JobKeeper claim being made by another business or an employer for that individual. And the same applies if you are a sole trader or you're a director of a company or a trustee of a trust. You can't receive it as an employee elsewhere or even in your own business and as a sole trader, trustee, director. So the short answer is no, you cannot get this JobKeeper payment twice for the same person. Claude, you might want to run through this one. Can a sole trader with more than one business receive multiple JobKeeper payments?
Yes, Kelv. So again, no, you can't. It only applies for basically one application. So if you operate as a sole trader under a couple of different sort of banners, can only be applied once as a sole trader. So as we keep saying, the integrity measures, you can't double dip more than once, obviously.
Some of these questions have already been covered, so apologies, but can more than one eligible business participant be nominated by an entity? Now, this is an interesting one. And when you talk about a business participant, that's what I referred to earlier, being a director, a trustee, a shareholder, a partner in a partnership even. And we have plenty of these, and I think we've even got a case study on this one too. So Claude, I'm not going to help you with this one. I'm not going to give you the answer. I'll let you answer this one and then we'll put it up for you, see if you get it right.
Yeah, so basically, again, so this relates to, as Kelvin said, if you operate a business via a company, trust or partnership, and you don't draw yourself a wage, as long as you meet the eligibility criteria of your business reduction in turnover, then you can nominate one of a director / shareholder or an adult beneficiary of your trust or one of the partners who will be entitled to the JobKeeper payments of $1,500 a fortnight. We are still yet to see how this application process works. Again, we are guessing that everything will come out on Monday with all the finer detail. This is a bit of unfortunate because we've got some situations where we've got a business that operates as a partnership, yet there's 4 partners. They all actively work in the business. They don't draw a wage, obviously, but you can only nominate one of the partners to claim the JobKeeper assistance, which is a bit unfair, but that's the way it is, unfortunately.
Yes, it is a little bit. Same applies. Partners, directors, trustees, only one eligible participant can be paid. Thanks, Claude. You did get that right. I'll give you a tick on that one. Next question, can a sole trader receive JobKeeper payments when they are also an employee of another business?
Sorry, she's waiting for me for an answer? Okay.
Yes.
No, you can't. If you're an employee of a business and they are nominating for you, then again, that's your criteria for meeting this. You can't then go and do it as a sole trader as well. And again, and I'll keep referring to it, but you can't double dip.
Yeah. The counter to that is if they are an employee of another business, but they're not receiving JobKeeper, then they are entitled to receive it as a business participant. So
correct.
That's a different situation, but yeah, no double dipping. ATO don't like us sticking our nose in the trough. All right, the JobKeeper payments to employees have to be made by 30 April. but what if we do not qualify? When will we get confirmation that we qualify? This is the $64,000 question, everyone, because that's why we keep saying you need to start working out if you qualify. We are getting a number of questions from employers saying, well, I've got part-timers, I've got casuals, I've got people that I stood down. How do I know if I'm going to get $1,500 for them when you're telling me that I must pay it by the 30th of April? This is a chicken and the egg type thing. So that's why we're saying next week is critical. If you're unsure, you need to talk to us next week. We need to start doing some numbers. We need to start looking at what employees you've got, how much you're paying them, those sorts of things. You need to start getting systems in place. Right, and this will give you an indication of getting systems in place. I mentioned earlier the ATO are still coming to grips with all of this. Even Xero, who provide the cloud accounting platform that the majority of us use, only today have they put in place measures to be able to indicate JobKeeper payments, what it relate, or you know, who is an eligible employee. Some of these sorts of issues that we've been struggling with as to, all right, well, how are we going to identify what payments are JobKeeper, what part is normal wage, how much is subject to super. So everyone is coming to grips with this, and it comes back to yourself as well. You really need to grab the bull by the horns and work out exactly whether you qualify in the next week, or at the very latest, the next just shy of 2 weeks. Okay, it must be by the 30th of April. You need to know, because that's when you need to pay these people if you want to be getting a JobKeeper payment. Okay, so our answer to this was the ATO will make contact within a week or so whether you need to prove your eligibility, but it's effectively the process you go through to enrol and then tell them why you qualify. So that's our understanding, but we are waiting until the enrolment process rolls out from Monday next week, being the 20th. So stay tuned for that. The next question, I don't know if my turnover will be reduced and thus be eligible for JobKeeper. Should I still pay $1,500 a fortnight for each employee? Again, the last question, or the answer I gave, I believe, potentially answers this one. It's not a perfect answer. However, if you do want to be considered for JobKeeper, you must pay them. So you've got to be monitoring this on a daily basis, which is what we're doing at the moment with a number of clients, and all of this information as it comes, gets released. We're just trying to keep across it, understand things like this, when you qualify, how you qualify, what you need to do.
Just further to that, Kelv,
Sure.
let's just say that you don't qualify for whatever reason in April, or you don't believe you do. It doesn't mean that you won't qualify in May. So you can, just because you missed the cutoff now, it doesn't mean that you won't qualify next month. So always, like Calvin said, always monitor your situation, monitor your eligibility, keep an eye on things. And as soon as you believe you qualify, that's when you register ASAP.
Correct. Thanks for that, Claude. Very quickly, I am still conscious of time. Do I now have to pay casual employees double what they were earning before? Double, triple, 50% up. It must be a minimum of $1,500 a fortnight. Okay, so short answer is yes. If you want to qualify, then you must be paying $1,500. This was a good question. What can an exploration company get? Now, an exploration company, in this sense, in relation to JobKeeper, is no different to any other business. So it would, in order to qualify, it would need to justify a decline in 30% of revenue. And my guess is, given who asked the question, is this is in relation to an exploration company that potentially doesn't have revenue. If there is no revenue to begin with, then you're unable to justify or to show a decline in revenue of 30%. Therefore, sadly, you wouldn't be entitled to it. However, you would be entitled to other measures if you've got employees. So happy to have a chat about that offline after the session if you like. But hopefully that answers that question. It might not be the answer you're looking for, unfortunately. What if employers do not have the funds to pay JobKeeper? This is commonplace. There's a lot of people that are in this boat. And again, the early announcement or the answer to this from the government was go to your banks. Okay, get funding from the bank. In the government's eyes, and they live in the theoretical world, they believe that the bank should be able to fund you against an upcoming payment that you'll get from the ATO. My thinking is that's not feasible at the moment, particularly as you've only got, or you've got probably 2 to 3 to 4 weeks. And whether you could get a loan application in place, get the banks to approve it, get funding of it, by that stage, you potentially have this money back. However, it might be an ongoing working capital situation. So we've talked previously about approaching banks, about how to go about it and about what banks do. So if you do have any questions on that, happy to chat, because we're talking a lot to clients about what they can do with their banks. Okay. Again, just confirming you must pay them by end of April. How are sole traders helped? And this question, I believe, was, are we better off under JobKeeper or Job Seeker? Again, we answered this one last week. A sole trader is assisted and eligible for JobKeeper, and not being an expert in Centrelink. However, looking at the numbers, you would be better off under JobKeeper. Okay, so keep that in mind if you are a sole trader. That's the end of our questions. Happy to take more questions shortly. What I did very quickly want to run through is just, and again, we referred to this last week, but business and year-end planning. At the moment, we are saying to everyone out there, whether they're clients or not, we're saying you need to obtain professional advice on these issues, because they are potentially complex and have a significant impact on the longevity and success of your business. Okay, so take some advice. If you haven't already lodged your Q3 BAS, get it done ASAP to take advantage of the boosting cash flow stimulus packages, because it does set you up for other things. In a simple sense as well, it does qualify you for JobKeeper, potentially. However, keep in mind what we said about GST turnover. Look at your BAS, compare it with the same BAS last year. Look at your March turnover that went into your BAS. So consider that as well. And cash flow planning. This is all about cash flow, people. So you need to be monitoring your cash flow, week by week at the moment. We set up monthly cash flows with our clients, usually the quick and dirty variety of cash flow. However, you need to be looking at that very closely. The other things that we're looking at the moment, FBT returns. Not everyone's impacted by FBT. However, if you are, you need to be looking at that as well. Okay. Because the end of the financial year for fringe benefits tax is 31 March. So keep that in mind. If you've got questions on FBT, Claude loves FBT, as does our colleague Jethro, who usually handles it. Don't shake your head, Claude. FBT is fun, I know, but it's not anyone's favourite. But talk to us about it. And tax planning as well. We're doing a lot of tax planning with clients. We always do year on year. This year, it's just as critical, because one of the things we're finding is that some clients have already paid too much tax. So when we lodge your March 2020 or June BAS, we can potentially claw some tax back, or we can optimise the year-end position. Okay. Business continuity planning. I've spoken about this the last 3 or 4 weeks. This is a lot of the work that Claude and I are doing day to day. Between he and I, we're doing 1 or 2 of these a day, every day. And we have done for the last 3 or 4 weeks, where we look at these 7 key areas within your business. I'm not going to go into detail. I have spoken about it previously. If you want information on that, email me directly, Claude or myself, or the information's available on our website. Happy to chat to anyone about this. It's an area that we are actually generating a lot of cash flow for businesses by working through these various aspects to ensure that their business can continue. And we want you to continue, not just the next 6 days, 6 weeks, 6 months, but 6 years, 60 years. So we're working long and hard at the moment on these areas to help our clients get through this situation, which we will all get through. And not all businesses are going to survive, sadly. However, as an economy and a state and a country, we're going to get through it. So we need to be working to get to the other side. This is our business continuity planning where we said, yeah, we can help you. So, and as we say there, we're all working remotely. Claude's in his lounge room. I'm in a study at the moment. So we're working remotely, but we're here and available for all of our clients. So please stay in touch. I am not actually seeing any questions that have been raised, so I'll probably ask Serena to put the word out. But if you do have any questions or comments, please let us know. Also, like any comments that people have got, whether they found this useful or whether it's been a rehash of anything. We are trying to provide new information each week, and we'll continue to do so while people get value out of it and while we have something to tell you. So we don't want to waste anyone's time. So if anyone has a question, happy to take that now and answer it. If there's no questions, then Claude and I can both take them offline. Otherwise, feel free to shoot something through to us in due course. Claude, have you got anything else that you'd like to add?
No, not too much, Kelv. I think pretty much it was covered. As mentioned earlier, we will get more clarity next Monday from the ATO on exactly how the process will work for everything from eligibility to applications of employees, applications by sole traders, trust, company directors and the like. So please bear with us. I'm guessing we'll be bombarded next week with a lot of new information, but we should have some more answers and clarity come Monday next week. Fingers crossed.
Yes, exactly. We have got a question come from Bruce. Thanks for that, Bruce. The question was, per the ATO, it says you should not use this JobKeeper employee nomination notice if you're intending to claim JobKeeper payments for an eligible business participant. For example, a partner in a partnership, an adult beneficiary, a shareholder or a director. So yes, that's correct. The nomination form is solely for employees. Your question is, has this other form come out yet? My answer to that is no, it has not. We have not seen how that will work yet, Bruce. So the critical part at the moment is nominating the employee. The difference with the business participants is that you effectively don't have to make this $1,500 payment to anyone to qualify. So I believe that's the key difference to this. With your employees, A, you must notify them, B, they must confirm that they want to be nominated, and C, you must pay them. For a business participant, that's a matter of fact. So if you are a director of a company and you don't take a wage, that's a fact. You work in there, you're effectively a notional employee being a director, and that's the way we've always seen it, albeit you don't get a wage. However, there will be a process to tick a box and say, Bruce is a director of Bruce Proprietary Limited, therefore he's entitled to it as well. Does that answer your question, Bruce? I know it's not the answer, as in, well, your question was, has the form come out? My answer is no. However, I can't tell you when that will come out and how. Great. All right. So thank you for that, Bruce. Do you have any other questions, Bruce? Or does anyone else have any questions?
Can I just expand on that, Kelv? If
Yes.
In that situation, if you're a director of a company, please don't put yourself on the payroll for the first time in April, because you would not be eligible, because you have not been an employee as of 1st of March. So you can still be entitled to the JobKeeper, but it is a different process. And like Calvin said, you don't have to pay yourself. And that's what I think a bit of confusion is that employees, you must pay them. Business participants, you don't have to. So therefore, that's great, but we still don't know what the process is to nominate yourself as a business participant or what the form looks like. Again, sorry to be a broken record, we should have more clarity come Monday.
Thanks, Claude. Have had a question from Bev, so thank you, Bev. Your question is, can you clarify? Yes, we go back and adjust pays from 1st of March to ensure $1,500 per fortnight gross payment have been paid. From 1st of March must be revisited and paid even if STP has been submitted. Just to clarify that, The 1st of March was the date when someone needed to be employed. Okay, so however, JobKeeper does not apply until 30th of March. So the fact that they got wages during the month of March is the amount of the wages is almost irrelevant as long as they were employed at the 1st of March. However, the critical amounts that were paid to them, or what's critical, is the amount that was paid to them from the 30th of March. So STP would have been lodged right through the month of March. It's the month of April and the 30th of March that we need to worry or need to concern ourselves with now. Okay, so March is critical and important to determine whether someone was employed. However, the wages they were paid in April are the important part for you. Okay, so hopefully, Bev, that answers your question. Again, if I've misunderstood that, feel free to clarify or email me directly as well. We do have a question from, the next question is, I have a medical business which is GST exempt. I assume my gross sales will be sufficient to submit even if they don't include GST. Yes, that's correct. As we said, they haven't defined GST turnover in the context of what we're looking at. However, our reading of it is it's going to be the amount that would normally go onto your business activity statement. So if you've got GST-free sales or GST-exempt sales, it would still be the amount that you just, disclose at, what's the item number called? A1? Is that the sales figure?
Well, yeah, somewhere around there. Yeah.
So it's almost irrelevant whether there's GST included or excluded, as long as that's relative to the previous period we're comparing. Okay, so hopefully, again, that answers the question. But perhaps Claude might be able to take that one offline if we need to delve into it anymore. Bill's asked a question as well. Bill, how are you? Good to see you online again. Your question is, we have an employee who has gone on workers' comp 2 weeks ago, possibly back to work in another 2 weeks. Is she now ineligible? My understanding of workers' comp, and I have read something on this as well, is that if you are paying them, meaning you are still employing them, they still qualify. However, if they're getting paid by an insurance company, Claude, is that correct?
Yeah.
They don't qualify. I did see an actual reference on this, Bill, so we may be able to clarify that for you offline, but there was a specific reference.
I believe, I think I read the same thing that you're going to refer to, Kel. I believe that, yeah, they still qualify for JobKeeper Bill. However, as soon as they, and as long as they're eligible, as soon as they receive JobKeeper payments, I believe, again, don't quote me, but I believe they, the workers' comp payments will stop. How they match the two up, I'm not sure yet, but I believe that's how it will work.
Just let us come back to you on that one, Bill. I have seen a specific reference to it, but I think it does come back to who's paying them. Are they being paid by yourself or your business, or are they being paid by an insurance company or someone else? So if you'll bear with us on that one, we'll get an answer for you. Claude or I might be able to shoot it straight through to you. So, but we will answer that question for you. So hopefully that will satisfy you in due course. If not in the next 5 minutes, in the next 5 hours, we might get it to you. Bev, thanks. That answered your question by the look of it. Does anyone else have any questions that they might like to ask? Or have we missed anything? Is there anything else that you'd like us to be covering on these sorts of sessions in the future? We probably can't fit too much in today, given we want to let everyone go fairly soon. But we've run 11 minutes over time, so I don't want to keep everyone here too much longer. Bruce has a last question. Go for it, Bruce. What would you like to know? Hopefully we can answer it for you. You haven't lost me either, just whilst Bruce is getting his question. Actually, here we go. A husband and wife run a sole proprietorship and a company. The sole proprietor is in the husband's name. They are both directors of the company. Can he get $1,500 in the sole proprietorship? Can she get $1,500 as a director of the company? The answer is yes to both of those questions. What you couldn't do is the husband couldn't get $1,500 as a sole proprietor, and then both of them get $1,500 as directors of the company. Okay, so it would be logical that he takes $1,500 as sole proprietor, and the wife takes the amount as a director. And some of this does come back to working out the best way to maximise your outcome. So keep that in mind. Yes, so you're spot on, Bruce. But happy to always take questions like that, because if you're thinking it or you're wondering about it, there's a good chance someone else is too. So look, I might wrap up there, guys, if there's no more questions. As I said, as always, Claude and I are here to help. We have been working many long hours, helping people to work out exactly how this applies to themselves personally, to their businesses, and to their employees as well. I mean, a lot of people are out there genuinely helping employees and wanting to maintain them. It is critical that we keep the wheels of commerce turning over, and that's a big part of why we're dealing with JobKeeper at the moment, and right down to lease negotiations. So any areas that we can help you, please get in touch. We want to be able to work with clients such as people like yourselves who are jumping on board and asking questions and just wanting to know how to deal with things. Bev's just asked when will we be forwarding this presentation. Serena's a gun. She supports us no end in getting this information not only together for Claude and I to be able to speak about these sorts of things. However, she will get that out to everyone this afternoon. So you should have this by close of business today. So she is critical to us being able to put these on each week. She schedules it. She pulls together the PowerPoint for us. She makes it look good. If it was left to Claude and I, it'd probably look as plain as his and my white shirt. I'll leave that in Serena's trusty hands, but I know she will get it out to you fairly soon, Bev. So thank you all for listening in. I do wish you all well. We've had a short week, so we're at a weekend again. I hope you all have a great weekend, and I hope your businesses all get through this period, survive, and prosper in the future. So thank you very much for everyone. I'll say goodbye, and thank you, Claude, as well for
Thanks,
helping
everyone.
me out.
Yep. Thank you.
Okay. Thank you, everyone. Have a good weekend, and look forward to speaking to you all soon.